Hello and welcome to the Business Standard Morning Show. I'm Kanishka Gupta. It's the 15th of November 2023 and here are the questions we will be answering today. How big is India's adulterated turmeric problem? Will EVs eat into IGL's future? What does Prashant Jain think of markets in Samvat 2018? And what is the Ozempic effect? For ages, turmeric has been used as a key ingredient in dishes across India and in other South Asian nations. It adds to the taste and texture of dishes. People also swear by its anti-inflammatory properties. But is the turmeric you are consuming pure? Maybe not. Like several other food items, turmeric too often goes into the wrong hands before landing in our food. It is routinely adulterated with lead chromate to give it a golden hue. Instead of giving health benefits, it is exacting a big toll. But how big is India's adulterated turmeric problem? Kasturi Akhil finds out.
Extensively found in almost every Indian kitchen since time immemorial, turmeric is also known for its medicinal properties. But what most Indians may not be aware of is that the vibrant yellow hue of the spice is at times achieved chemically by using what is called lead chromate. And it is certainly not a coincidence that India, being the largest producer, consumer, and exporter of turmeric in the world, is estimated to have the highest incidences of lead poisoning in any country. In the year 2022-23, India's turmeric cultivation covered an area of about 3.2 lakh hectare with a production of 11.6 lakh tons, which accounts for over 75% of global turmeric production. More than 30 varieties of turmeric are grown in over 20 states in India. The largest producing states are Maharashtra, Telangana, Karnataka, and Tamil Nadu. India exported around 1.5 lakh tons of turmeric and turmeric products in the same period, with the leading export markets being UAE, USA, Malaysia, and Bangladesh. So, how widespread is the practice of turmeric adulteration in India?
ये एडल्ट्रेट करने वाले या 25% ब्रोकन राइस करीब मिलाते हैं, जिसको कलर को मतलब कलर करने के हिसाब से वो लोग कलर भी मारते हैं. जो लोग ये कर रहे हैं उसके अंदर लेड परसेंट जरूर आ रहा है और वो अपने हेल्थ के लिए भी काफी डेंजर है. परंतु जो प्योर बड़ी कंपनीज वाले हैं, जितने भी पैकिंग के वो आ रहे हैं, उसमें लेड का प्रॉब्लम कहीं भी नहीं आ रहा मैडम, जितना भी है. और ये जो भी पॉलिश होती है, ये नेचुरल पॉलिश ही होती है. 3 घंटा ड्रम में घुमाते हैं तो अंदर की नेचुरल पॉलिश ही बाहर आती है.
The last 6 to 8 months, there has been a spike in turmeric prices. The prices which were roughly around 8,000, 8,500 a quintal has moved up to 12,000, even 13,000 rupees a quintal in some markets. Now, when the price gives you so much of advantage, so much of the price differential moves up so sharply in such a short period of time, so it obviously gives you the incentive to do all sorts of to do adulteration. And turmeric adulteration is pretty common. In fact, adulteration in spices is pretty common. Turmeric, chilies, even dhania, jeera, all these spices are adulterated very easily because there is a very small branded market for them. There's a huge unbranded segment, which of the total market size, even I think 10-15% should be only branded.
In 2019, researchers from the non-profit International Center for Diarrheal Disease Research, or ICDDR, at Bangladesh, revealed that lead chromate could cause kidney as well as brain damage and even cause developmental issues in children. ICDDR, along with Stanford University and Bangladesh's Food Safety Authority, soon set out on a mission to eliminate turmeric adulteration from the country. After necessary intervention, it was found that the levels of turmeric adulteration in Bangladesh's spice markets had dropped to 0% from 47% earlier. Undark, a digital magazine that did an intensive study on turmeric adulteration in Bangladesh's spice markets, found that until 2019, traders in Bangladesh intentionally added the chemical while processing turmeric powder for economic gains. They earned more when they sold the polished turmeric powder, and most of the time wholesalers did not even purchase their turmeric stock if the chemical was absent. So what lessons does Bangladesh's case study offer us?
Like Bangladesh, about which I have read in terms of our report, we can have a systematic approach of a step-by-step approaching different stakeholders to eliminate this particular adulteration of lead at different levels. There has to be testing done at the ground level by the regulator. There has to be testing done at the distributors level by the state, because remember, health and food is state subject. So they come very much into the picture. And so it's a handshake between the states and the regulator.
It is not just India or Bangladesh struggling with high levels of lead exposure. According to a UNICEF report, up to 800 million children around the world have blood lead levels at or above the actionable level, and nearly half of these children live in South Asia. A think tank in Washington, Center for Global Development, suggests lead poisoning could be a plausible reason behind the learning gap between children in rich versus poor countries. Experts point out that adulteration in spices is a very common issue, especially in the unbranded segment, and therefore warrants intervention at all levels. Testing and surveillance right from the grassroots level could help ensure the elimination of the problem.
It is not just the food. Our air too is mixed with toxic contents. AQI in Delhi and other parts of North India remains close to severe level during winter, and a race to find a permanent solution is on. Switching to electric vehicles is one such move in that direction. The Delhi government has recently asked all the cab aggregators and delivery service providers to switch to EVs by 2030. But this move may impact the city's largest CNG provider, Indraprasth Gas Limited, or IGL. Abhijit Kumar has more on it.
To combat carbon emissions and curb air pollution in Delhi, the Arvind Kejriwal government has announced full transition of all commercial vehicles operating within the city to electric power by 2030. The new EV policy of the government proposes a phased addition of electric vehicles among cab aggregators, with 5% within 6 months, 50% within 3 years, and 100% transition by 2030. However, it can potentially disrupt the market for compressed natural gas. Most commercial vehicles in the city, like auto rickshaws, cabs, and delivery services, are CNG operated. And the city's largest CNG provider, Indraprasth Gas Limited, or IGL, may face the brunt. As soon as the new EV policy was announced, the shares of IGL tanked nearly 12% to 403 rupees, its lowest in the current year. As on November 8th, the share price was at 395 rupees. Brokerage firm Jefferies downgraded IGL's volume growth estimated to 3% for FY24 and 6% each for FY25 and FY26. In Q2 FY24, the gas company reported a 28.5% year-on-year increase in profit to 534.8 crore rupees. However, the company's profitability may come under pressure going forward. IGL's sales are predominantly driven by CNG, contributing to approximately 75% of its total sales volume. Rest is piped natural gas or PNG. As per reports, 15% of IGL CNG sales come from cab aggregators, while private cars and auto rickshaws represent 40% and 6% respectively. Buses contribute 20% and the remaining comes from taxis and light commercial vehicles. Delhi makes up for 60 to 65% of IGL CNG sales, and Gautam Budh Nagar and Ghaziabad contribute 20 to 23%. So, what does the new EV policy mean for Indraprastha Gas Limited?
In my viewpoint, I think this is going to come as a dampener as far as I think the business outlook for IGL is concerned. Though it may not happen in one quarter, but in every progressive quarter, you are likely to see the stagnancy in the business of IGL from the CNG business. The quantum growth, which otherwise I think would be expected out of this situation, is not there. As such, if you look at, I think the volume growth that this company has been producing, it is in a single digit. So from a very clear perspective that if the 3,000 buses are going off the road in next 2 years' time, that means I think that amount of volume is not going to increase for CNG. On the contrary, it will come down. Even if the neighboring states adding their vehicles and converting them to CNG, at the best, I think that volume will remain in single-digit growth level. I think beyond that, I don't expect, I think, things to turn around big time.
Analysts believe that to mitigate the impact of reduced CNG sales, the distribution company may need to diversify its business by exploring opportunities in the EV charging infrastructure segment. However, it's not all doom and gloom for IGL. In a recent interview, Managing Director Kamal Kishore Jatiwal said that the company is ready to combat any volume impact caused by the new EV policy. He mentioned that the company is in talks with various state transport units for converting the state buses to CNG.
They have to look beyond Delhi. They have to expand their geographical reach. Leaving aside the demand projections in Delhi, their margins have been robust. IGL has now been reaching out to public state transports of Uttarakhand, Rajasthan, Uttar Pradesh and Haryana for conversion of their buses to CNG. Management has said that Delhi draft EV policy will impact around 15% of its current volumes, so I think it's discounted to that extent.
The Delhi's government's ambitious EV policy presents challenges for traditional energy providers like IGL. Nevertheless, analysts believe that given the substantial number of vehicles still reliant on CNG and the scope of converting heavy diesel or petrol-run vehicles to CNG, IGL can mitigate the pressures posed by the electric vehicle market.
Stocks of city gas distribution companies IGL and Mahanagar Gas tanked over 10% after the Delhi government's order. IGL is still in the red. Moving on, markets have been on a roller coaster ride in the last Samvat, navigating multiple headwinds such as higher rates, geopolitical flare-ups, rising crude oil prices and trending bond yield. Indian markets, like their global peers, are trying to adjust to this new normal. Will they sparkle in the next Samvat, or will these headwinds cast a serious dent in the year ahead? Puneet Wadhwa caught up with Prashant Jain, CIO, 3P Investment Managers, to find out more.
Hello and welcome to the show. I am Puneet Wadhwa and today we have with us Mr. Prashant Jain. He is the CIO at 3P Investment Managers. Welcome to the show, Prashant. Let me begin by asking you the outlook for the next 1 year. How do you see the Indian markets and global play out in the backdrop of whatever is happening globally in terms of bond yields, in terms of what the central banks may do, in terms of where the oil prices are?
Sure, Puneet. I think that's a very pertinent question. I think the outlook for the economy is very strong. I think mainly driven by improved outlook of service exports, driven by acceptability of remote working. And we see the number of jobs in India being created at a very fast pace. And India is also seeing increased traction in manufacturing investments. So I think the economic outlook is quite strong. The macroeconomic parameters are very good. The bank NPAs, bank balance sheets are extremely healthy. Corporate leverage is extremely low and corporate profitability is at very healthy levels. Coming to markets, I think these are fairly valued markets, and Nifty has underperformed nominal GDP for last 2 years. CAGR has been 5%, and the excesses therefore have moderated. I see some excess in the small mid cap space. So I think these markets are very fairly poised. Thus far, the rise in US bond yields has not impacted the Indian bond yields or markets. And the gap between US and Indian bond yields has actually come down to 2.5%. It used to be between 4 to 6%. I don't think it can possibly go any lower, because the gap between India and US inflation is also now close to those levels. So my view is that if bond yields in US go up further, then I think it will impact Indian interest rates as well, and any further spike in US yields could bring one more round of FI selling. And while FI sales thus far have been absorbed by a very healthy local flows, but a knee-jerk reaction cannot be ruled out. The near-term outlook for market is probably a range-bound one, with some risk of correction should US yields spike up. But longer term, I think these markets should deliver. Nifty should compound around 12% CAGR, medium to long term.
If the bond yields are going to rise, hypothetically, could the next 1 year be belong to the debt market investors as compared to the equity market investors? And what kind of returns should one expect from equity markets versus the bond markets?
No, I think, as I said, should US yields rise further from where they are, I would expect the Indian bond yields also to rise in tandem. And so if you invest in bonds, if US yields rise, that the near term, there could be some depreciation in bond prices, but longer term, I think the returns will be closer to the bond yields. I think you also have to take into account the much higher taxation on fixed income versus a concessional taxation on equities. And I think therefore the risk reward for a medium to long term investor, to my mind, is more towards the equities.
What are your overweights and underweights as things stand, let's say from a year's perspective?
The consumer sector, both the staples and discretionary, is what is expensive. I find bulk of the other sectors to be fairly valued, and there is some undervaluation to some extent in the banks and in the power utilities space.
In terms of market valuation, Prashant, PE is the go-to barometer. When we say that the market excesses have been removed, which means that the price-wise there has been a correction. But a lot of this was to be supported by earnings coming through. What's your call on earnings given the macro headwinds in India and abroad? And do you think that they could probably be trimmed further as we go ahead over the next few quarters?
The earnings have been very strong last few years, and India's corporate profits to GDP that had fallen to around 1% has recovered closer to 4.5%. I think margins are at very healthy levels across sectors, to my mind. And going forward, I would expect earnings to grow around 15% CAGR. And I don't see too many risks to that at this point of time.
When do you think the domestic mutual funds and the retail investors will start to take the risk off the table?
No, I think, Puneet, I would say that domestic flows were quite secular and acyclical, and we have, if you look at the SIPs, it's crores of investors who are investing 3,000-4,000 rupees a month. The flow of EPFO, NPS, the flow towards through insurance companies, these are quite structural. And interestingly, it was the first time in last 20 odd years when in 2021 markets, foreigners sold almost 2 lakh crores worth of equities. The markets did not fall at all. So I would say the vulnerability of Indian markets to foreign outflows that we used to witness in the past, we are far less vulnerable now. A small correction, a knee-jerk reaction cannot be ruled out, but I think the recovery should be extremely fast. Equities have over time emerged as a core asset class for households, and the percentage of flow of savings going towards equities continues to rise.
Thank you so much, Prashant, for your time today. We hope to see you soon.
He's making plans for an early retirement. Business Standard.
After the world of financial markets, let us turn our focus to a medicine which is selling like hotcakes across the world. In recent months, this prescription drug has become all the rage with those struggling to shed excess fat. Semaglutide's popularity has led to the rise of a new term, the Ozempic effect. So what does this term mean and how did it come into being? Bhaskar Kumar brings you the answers.
A prescription drug has become all the rage with those willing to shed excess fat. Yes, we are talking about semaglutide. This medicine is all over the news and is being used by celebrities, Instagram influencers, physique athletes, and the common folk alike. Semaglutide is a drug that is used along with a proper diet and exercise program to control high blood sugar in people with type 2 diabetes. But this diabetes treatment has turned into what many may see as a miracle weight loss cure. Semaglutide is available in two forms. There is the pen injector called Ozempic, and there is an oral tablet version known as Rybelsus. The injectable forms of semaglutide have resulted in significant weight loss among patients, and its success has led to the rise of a new term, the Ozempic effect. The medicine has also caught on in India. In early 2022, Novo Nordisk's oral semaglutide called Rybelsus was launched in India. The tablet found an enthusiastic reception despite its high price, which can come to about 10,000 rupees for a month's supply. However, in late September this year, reports emerged that global regulators were flagging shortages in its supply. In fact, a number of patients in India were also complaining that certain dosages of the drug had become difficult to come by. Till date, the two injectable versions called Ozempic and Wegovy have not been launched in India. There are also reports of semaglutide being used recreationally by people without type 2 diabetes for its cosmetic effects. By March this year, videos tagged with the hashtags Wegovy and semaglutide had more than 800 million views on TikTok. In short, as an article in Harvard Health Publishing explains, this is what happens when a drug goes viral, with social media and celebrities triggering a diabetes drug shortage by turning its side effect into the major selling point. This runway popularity and the resultant media exposure have contributed to something called the Ozempic effect. The Ozempic effect is a recently crafted unofficial term which refers to the likely impact of the medicine on a wide range of existing treatments, from those for the kidney to heart disease. There are indications that semaglutide, in its various versions, could reduce demand for many drugs that address a wide range of diseases. Many of these drugs are major sources of revenue for pharmaceutical giants and the larger industry. What is the reason behind all of this? According to reports, recent studies have started to find that the drug, along with other similar GLP-1 receptor agonists, has far-reaching effects. It appears that the drugs have a protective effect on organs like the heart, liver, and kidneys. The fact that it helps people lose weight, which reduces the risk of many diseases by itself, is another factor. There are also indications that this class of medicines could even help with substance abuse and Alzheimer's disease.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
But these are still early days. Whether semaglutide will live up to all of its promises beyond weight loss remains to be seen. Well, that's all for today. For more news, views and analysis, please log on to business-standard.com. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.